So one of the questions we get a lot here at RL Property Management is, hey, I'm looking at buying an investment property and I need to know how much money it's going to make. What's going to be the cash flow from the property on a monthly basis. So, I could probably spend 3 hours talking about how to do a cash flow analysis and prepare a pro forma. But I'm going to give a high level overview here and maybe touch on a few things that I see investors commonly overlook or miss when they're trying to predict cash flow or returns on an investment property. So of course, there's two major parts to looking at cash flow. There's the income side and then there's the expenses. So let's talk about the income first. So obviously you have rent income as, the income on an investment property. Ideally, the tenant is paying rent in full every month. So the first thing, of course, you need to estimate is, hey, how much is the rent going to be? And we can help with that. We're always happy to do a rental market analysis if you're looking at a property in the Columbus area or within Franklin County and you're not sure how much you think the rent could be. So you can take that estimated rent or you can, find it for yourself. And the first thing you need to do, and this is still on the income side, is to discount for vacancy. And we see that most properties in Franklin County are running around a 6 to 8% vacancy on average over the long term. So of course, some years you're going to have no vacancy at all because the tenant is, in the middle of a 2-year lease or something. And then other years you're going to have an extended vacancy. You may have a month or two, where the tenant moves out, you're getting the property turned over and ready to rent. And then it may take a month or 2 to 4 weeks to find a new tenant and have them move in. So you're usually safe to discount the income by around 6 to 8%. Okay, what about the expense side? Well, let me highlight some of the major categories that you need to be thinking about as you're predicting the cash flow for your investment property. So obviously repairs and maintenance, that's going to be one of your biggest items. And a lot of people use something like 10% of the rent. I don't like that approach. I find it's not very accurate. I would encourage you to think a little bit more critically about how you might be able to estimate your repairs and maintenance. We sometimes like to use like $1 per square foot, like $1 or $2 per square foot per year as an item for repairs and maintenance. The other one is going to be capital expenses or reserves. You need to make sure you're saving appropriately or setting aside funds every month to replace those capital items as they reach end of life. Then you've got property taxes. So this is a big one that investors miss. Not that they're not accounting for them at all, but if you're actually getting ready to buy a property, you need to make sure that you're adjusting the property tax expense using the purchase price, because what will end up happening is if you go and look on the auditor's website, whatever they have that property appraised for is probably many years old if the property hasn't sold in a while. When you buy the property, the appraised value is going to go up and then you're going to be taxed on that new rate. And that could be, double the current, annual taxes. So be aware of that. Insurance is another major one. That's pretty easy. Shop around, get some prices, get some quotes on insurance for the property. Landscaping and maintenance. Landscaping and snow removal. So a lot of California investors may not realize, but we actually get snow here in Ohio. And if you're buying a multifamily property, especially if it has like a common area parking lot, you're going to end up having to pay to have that snow removed every time there's a snow event. And then landscaping is, obviously paying someone to run around and cut the grass and deal with the landscaping of the property. Other expense items that we see getting overlooked are items like pest control. So from time to time, you're going to have, vermin, rodents that infiltrate the property and need to be dealt with. So those are just some of the categories of expenses you need to be looking at when you're trying to predict the cash flow at a property. And then obviously if you have any debt, so your debt service would need to come off of that as well for your principal and your interest. So I hope that helps as you try and predict expenses at an investment property.